Wow. Okay, so a lot happened in this Paytm board meeting, right? It's like they covered everything from financials to international expansion and even a director appointment.
Yeah, it's quite the update, isn't it? It seems like they're trying to, streamline things while also pushing for growth in multiple directions. It's like they're juggling a lot of balls at once.
Exactly. So let's start with the financials. They approved the unaudited results for the quarter and 9 months ended December 31st, 2024, right? What's the gist of that?
Well, the key takeaway is that while they still have a loss, things are improving. They actually saw an increase in revenue from operations and a decrease in their losses, which I mean is a step in the right direction.
Okay, that's good to hear. And they've appointed a new non-executive independent director, Bimal Julka. Seems like a big name.
Indeed, he's a retired Indian Administrative Service officer with a lot of experience, it seems. His background includes strategic planning and service delivery management, which, could be a huge asset to Paytm as they navigate their growth.
So moving on, there's also an update about the default loss guarantee or DLM with SMMFMC India Credit Company. It's been increased from 225 crore rupees to 350 crore rupee. What's the deal with that?
Well, that increase in the DLM limit means they are basically providing a higher security blanket, right? It's like they're showing more confidence in the loans they're dispersing to merchants and willing to back them up.
Makes sense. And they're expanding internationally too, it seems. They plan to incorporate subsidiaries in the United Arab Emirates, Saudi Arabia, and Singapore.
Right, that's a significant step. They're basically trying to replicate their technology led model in similar international markets. Think of it like, they are taking their core product and adapting it to new markets.
Okay, so it's not just about India anymore. They're also looking at different ways to do this expansion, like organic growth, local licenses, and even partnerships, which, seems smart.
Absolutely, it's a diversified approach, which is always good because you're not putting all your eggs in one basket. And it shows they're being flexible in their expansion strategy, like they are willing to try different things to get it right, I guess.
And what's up with GI Pet Tiri? They mentioned that subsidiary thing again.
Ah, yes, they're still planning on incorporating one or more wholly owned subsidiaries there, but it looks like it's going to take about 24 months to complete that process. So, it's a longer term play.
Right, that's good to know. And lastly, they're selling their stake in Exceed IT Solutions, a step down subsidiary.
Yeah, that's like a streamlining move, isn't it? It's like they're getting rid of something that's not really a core part of their business to focus on what matters more.
So it's a mix of streamlining, growth, and new strategic moves all happening at once. It's like they're clearing the deck while also building new things.
Exactly. It's not just about the financial results of the quarter, but also about the strategic direction they're taking. It's like they're laying down the groundwork for the next phase of their growth.
Okay, now let's talk about the auditor's report. They did a limited review of the financial results. Anything noteworthy there?
Well, the auditors basically said that based on their review, there were no major issues with the financial statements. There was one point they emphasized about a subsidiary's application to the Reserve Bank of India, but they made it clear that it doesn't really impact the financial results significantly.
Right. It was about that payment system authorization application, I think. They've been working on it for a while, but still waiting on final approval, right?
Exactly. It's still in process, but they've got an approval from the Ministry of Finance, which, seems like a good sign. It's like they're moving through the process, even though it is a bit slow.
Right. It's all about regulatory hoops, I guess. Now, they have a separate standalone financial result tool, right?
Yes, they do. And the auditor's review of the standalone results is similar to the consolidated one. No major issues, which, is reassuring.
So, overall, it seems like the audits are clear and Paytm seems to be following the right procedures. I guess that means there are no red flags.
Precisely. It suggests that they are, handling their finances and disclosures responsibly, which gives some confidence in the numbers they've presented.
Okay, so let's shift gears a bit now and talk about this huge earnings release. The numbers seem much better than, the previous quarters, right?
Absolutely. The earnings release really does highlight some impressive improvements. Revenue jumps to 1,828 crore rupees. Contribution profit is up. EBITD and profit after tax are trending upwards. It's like they're gaining some good momentum now.
Okay, so that's, great news, right? The operating revenue was up 10%, quarter on quarter, and contribution profit increase as well, which seems solid.
Exactly. And their contribution margin, though slightly down, is still a healthy 52%. It seems like they have a good hold on their revenue generation, like they know where their money is coming from.
And the EBIT deeds before ESOP improved by 145 crore rupees quarter on quarter. That's a significant jump. And the profit after tax also improved by 208 crore rupees.
Yeah, and that's all while, they're focusing on reducing indirect costs. It seems like they're becoming more efficient in their operations, like they are really watching their expenses.
And their payment services revenue grew by 8%, which, is good, while their financial services revenue saw a sharp 34% increase.
That financial services jump is significant. It seems like all those merchant loans and DLM programs are really paying off. Like they've found a way to increase their financial services revenue.
Right. And the device merchant base has crossed 1 crore 17 lakh with an addition of 5 lakh new merchants, which, means they're growing their user base.
Yeah. And that growth indicates that their strategy of providing payment devices is working well. It's like the more merchants they have, the more transactions that go through them. So it makes sense.
And the gross merchandise value, or GMVV, also increased by 13% quarter on quarter. It's all going up.
Exactly. These numbers suggest that both their payment and financial services are growing steadily, which is a, positive sign. It's like the machine is starting to rev up, I guess.
So, what are the key takeaways from this earnings release then?
Well, it's clear that they're focusing on both payments and financial services, reducing their costs and, trying to be more efficient. And that's all leading to an improvement in their overall financial health. Like they're finally hitting their stride.
And they're emphasizing a compliance first approach, which is important, especially with all the regulatory scrutiny they've been under, right?
Absolutely. It shows they're not just focused on growth, but also on operating within the regulatory framework, which is like building a solid foundation for their business.
Okay. They're also continuing to focus on merchant payment innovations, customer acquisition, and artificial intelligence to improve efficiency, right? It seems they're covering all the bases.
Yeah, they're, focusing on all the important stuff, which shows they have a well-rounded approach. Like they're making sure that all the different parts of their business work together.
Now, there is that mention about the sale of stock acquisition rights, the PayPay stake sale for 280 million US dollars, which, is a big deal.
It is. That sale actually added to their cash balance and provides them with capital to push forward with their growth plans. It's like selling a valuable asset that can be used to invest in other areas,
Absolutely, which leads us to a cash balance of 12,850 crore rupees, up by a good margin. I mean, that's a hefty number.
Indeed, that solid cash reserve should give them a lot of flexibility for, strategic decisions. It's like they have a lot of fuel to drive their growth initiatives.
This might be a good point to remind our listeners to like, share, and subscribe to our channel for more insights like these.
Definitely, that's a great call. Thank you for that.
So, lastly, the monitoring agency report also shows that there were no deviations in the use of IPP funds, which is good, right?
Yeah, the agency report and the statement of deviation both confirm that they've been utilizing the funds as disclosed in the offer document, which, shows they're transparent and accountable.
Right. It means they are not misusing investor money. So that wraps up the discussion on the board meeting, earnings, and other regulatory updates, doesn't it?
It does. Overall, it seems like Paytm is trying to streamline their operations, expand their reach, and improve their financial performance. It's like they're on a journey to be more efficient and profitable,
Definitely. It's quite the turnaround story if they keep up this momentum. So, what's your overall impression then?
Well, I'd say that despite the challenges, Paytm seems to be on a better path with clearer strategic directions now. There is a lot of streamlining, while expansion efforts are also going on. It's like they're starting to find their footing,
Exactly. And it's clear that they're focusing on both growth and efficiency, which is a great combination for long term success. It seems like they've learned a few valuable lessons, I guess.
Agreed. It'll be interesting to watch how these strategies play out in the coming quarters. Will their international expansion bear fruit? Will the focus on financial services continue to pay off?
Definitely, lots to look out for. And I guess that's all we have for today. Thanks for joining me on this deep dive into the Paytm updates.
Of course, it's always fun to unpack these complex stories. We'll be sure to keep you all updated with all the new developments.